Happy Sunday, everyone. I hope you're doing well today. I just wanted to go over a quick trade recap for the pound yen. I took a trade last week. It grabbed me about 150 pips, and this is the analysis behind it. Okay, so looking at the 240 chart or 4-hour chart, you can see this yellow line is the let's bump out to the daily chart. You can see 147 has been very important to for buyers. They have used that over and over again to push this market higher. Once it was initially broken, it came back, retested it basically to the pip before pushing up, and then came back down for a double tap of it before pushing off to new highs up to around 156.60, 156.70, somewhere around there. Then we came all the way, had a big bearish move down, broke and closed below it on the daily and the weekly, I believe, but didn't get any follow through. The very next week, never traded below that weekly candle, and then pushed right back up. Had a weekly candle, or kind of an inside week, and then we slowly pushed up. We kind of peaked out here around 153 and then pushed back down to 147 and tapped it a couple more times. So if you look at the 4-hour chart, you can see just how many times that it has been tapped. You know, once, twice, 3 times, 4, 5, 6 times, somewhere around there, between 5 and 6 times over the past couple months. So it's important. And you know, once we double bottomed here and broke up, I was looking for a long opportunity. I felt like the market was going to push up from that 147 level because it just was not able to break it. So you know, to add to that, we kind of broke this counter trend line after we double bottomed, pushed up impulsively. So fib wise, I fibbed up, was looking for some profit targets that the market may want to reach for, and once we kind of topped out here around 149 and pushed back down towards 147, I saw that the market was consolidating down around some of these fib levels from our impulsive move out of 147. So I felt the fib structure was holding. Didn't take any trades here because at this time, you know, I didn't really have this trend line because it wasn't established yet. I hadn't drawn it yet because we hadn't really kind of made any decisive move one way or another when this was consolidating down here. But once we pushed up, retested, pushed up again, then I felt confident in putting this trend line here, using this as an anchor point and this as an establishment point. It's a very, very patient process. On, you know, then this is a 4-hour chart, so this is over, you know, several days to a week that, you know, I'm planning this one single trade. A lot of patience involved. So once I felt confident with that trend line, I waited for the market to kind of see what it was going to do around 149. I may have missed the opportunity and it was just going to push right on up to the profit targets, but you can see we kind of petered out around 149 again. Excuse me, and started pushing back down. So that's when I was looking for my trade. I was looking for this third touch of this trend line, not really counting this one, kind of grouping those together as the establishment point because they're essentially the same. But so I was looking for this touch here, and you can see if we drop down to an hourly chart, that the market was kind of doing this little channel structure here on the 1-hour chart. So I was looking for this channel bottom completion to complete, and all that was kind of intersecting around some of these fib levels. If you remember from the 4-hour chart, I drew that impulsive move. That's a single, that's like 6 candles worth of bulls. Strong bullish move out of 147. So that's impulsive in nature to me. So I wanted to capture that Fibonacci ratio, those fib. I wanted to use that as my impulsive move to see where the Fibonacci levels lined up, and you can see they were respecting. So once we bottomed out here, came back, that 50% of this Fibonacci move was right there as well. So with all that confluence, you know, in addition, we had the neckline of the double top, or sorry, double bottom. That neckline was lining up right there. So I felt confident going long there. I entered first test. I didn't wait for any type of confirmation. My entry was 148.26-ish, I believe, plus or minus a pip or two. And my stop was, if you look at the 1 hour chart, again, sorry for all the flippy floppy, you can see coming out of this trend line here in this range structure, we had kind of a little higher low. And that's where I put my stop loss, was right there at 147.85. So this was my stop. Let me do that. I'll just change it to red. So that was my stop loss. That was my entry. So I risked about 40 pips, I believe. Yeah, about 40 pips. And didn't move my stop until we kind of broke this structure, this little trend line here, and then I just moved it up to break even. At that time, I was just shy of 3-to-1 risk to reward, and then we pushed up to that 149. I think I took profits at 74. It was essentially where I took partial profits at. I'm still in this position, as you can see. Here's my break-even stop there. But 148.74 was essentially where I took partial profits. So, nice trade. Very little risk for the potential reward. And if this is truly going to initiate a bullish move out of 147, this has a potential to go much higher. Back to this trade, I am at break even on this trade, so I took about 350 to 375 pips off of that. This trade looked something like this. I don't remember exactly my stop loss on that, but it was 50 or 60 pips maybe. And I took profit about right there. So this was a very nice trade. So these were my trades. The last 2 trades I've had on GJ, these are them. I may have had a couple intraday trades, like 20 pip scalp or something like that, but these are the 2 larger trades that I've taken on GJ recently. Both these trades are risk-free. Both of them are money in my account. So if both of them get stopped out, you know, one way or another, it's no harm, no foul, right? Because both of these were profitable trades. And just to show you, I kind of posted this a little bit on my Instagram story earlier. This is essentially the 1 hour chart here when we were just bouncing from the levels there that I had planned, right? You can see where I was anticipating the market to go, and it went right there. So don't forget about your entries, but also don't forget about your exits. Those are important as well. If you like this, let me know. If I can help you at all, let me know. I hope you have had a great week, and I'm looking forward to the trading week, and I hope you are too. Take care, guys.